And we're live and we're back here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time. Coach Tim here from Untitled Trading to be your host here for today's show. We got a fun one planned for you. I got Coach Frank and Coach Matt here to break down the technical response after the jobs report showed a lot more jobs were added in July than what were expected from economists. A couple of months in a row of pretty good, healthy jobs reports, by the way. We'll break down those technical responses, talk a little bit about the data that we saw. We also have some earnings roundup. Companies like Monster Beverage and Virgin Galactic and DraftKings, another very popular name that we're going to break down those numbers on. And then Coach Frank, as always, has brought some of his favorite charts to share with us on a Friday. Let's bring the boys in here. Let's have a conversation. Coach Matt, you first. How you doing today, sir?
Tim, I'm doing absolutely fantastic. I'm definitely doing better than gold today.
Yeah,
definitely doing better than gold.
One would hope.
Gold's taking it on the chin. Yeah, it got knocked out on support. We'll talk about
had that combo 1-2 punch today. That it's important analysis, but not shocking. It got beat after that unemployment report. That unemployment report was a very good report.
Very robust, very strong. A lot of jobs added in leisure and hospitality. We'll talk a little bit about that. But Frank, pleasantries first. How are you doing today, sir?
Doing well. Excited to be here as always. I now can say the earnings season is behind me. Right. And that is always an exciting moment for me when we finally are like, yeah, there's stragglers now. I can live with stragglers. They don't bother me at all. But excited to be here hanging out with the crew. Always fun talking stock with folks.
Absolutely. And it's mostly behind us. Yeah. I mean, we're going to lighten up. The last 2 weeks, we're very, very busy on the earnings front, over 130 companies per week. I think the week before 170 or something like that on the S&P. Got the bulk of them through that. And yeah, it's been an interesting earnings season. And a lot of the last 2 weeks, guys, we've had tight consolidation on the S&P 500 as we're going through this data in earnings season. And now we're testing a breakout here on a Friday heading into the weekend. We're going to talk about that in just 1 second out there. If you're out there watching the show, though, I got a couple requests as we get started. Number one, hashtag Team Tackle right in the chat. Let's get the conversation going in a fun, positive way, as you guys always do. I love watching you guys chat about markets as we're going through the show. Number two, if you are brand new to the channel, click on that subscribe button, click on the bell, be my 19,000. We're getting real close to that number here. Either this week or next week, we should be able to hit that. Now, I'm always excited to see those benchmarks get hit here at Tackle Trading. So become one of our subscribers. We do this content every day the markets are live. Let's go here, boys. Matt, technical response here on the S&P first. Simple question. Is it a breakout?
Well, I think you technically have to call it a breakout. Would you like to see a little bit more volume? Yeah. Would you like to see a little bit more price appreciation on the breakout? Maybe. But yeah, I definitely think you have to call it a breakout here. You are achieving the intraday high. You're achieving the daily high so far today. Let's see the close before we officially confirm the market as a breakout. But you see the resistance pivot. We've talked about this resistance pivot for the better part of the last couple weeks, but you're looking at a resistance pivot from 44.16 up into that chop at about 44.22. You see the market coming into that yesterday, really kind of fighting up against that resistance breakout, hovered against that channel all through the late hours, all through the Asian market hours, the European market hours, and then obviously as you get into that cash open here in the US following the economic reports, you see it kind of break out, volatile, but again, you got the very important labor market numbers that came out around this exact same time frame. Now you're fighting up against that secondary breakout intraday perspective. So yes, if you do close above that 44.22 level, you have to officially call that a breakout in the S&P 500.
And let's talk a little bit about that labor market data. And then I want to get Frank's take on the technicals as well. I mean, Matt, 943,000 jobs added during the month of July, well above expectations of 865, up from June's 938. So almost, really, if you think about it, 2 million jobs through the last 2 months in the summer, as the Fed continues to say, this is our number one focus. We can announce tapering. We can talk tapering once the labor market shows the strength that we need. What was your read on some of this data here, Matty?
I kind of felt like I had a moment a few years ago where they kept talking about, well, when the labor market achieves certain metrics, we will act, right? And that was the way for years and years and years. Once we achieve 7%, we're going to act. Once we achieve 6%, we're going to act. Once we achieve 5%, we're going to act. Once we achieve 4%. Well, that took all the way up until December of 2019, after 6 consecutive years of that talk, before the Fed decided to act. And then we don't need to tell the historical lesson of what happened in December of 2018 when Jay Powell decided to raise interest rates for the first time. Unfortunately, like that, we are not talking about the raising of interest rates, and the only thing we are talking about when it comes to the central bank is how the labor market numbers are going to impact the tapering conversation. And for the last couple of weeks, every time you've asked me that question, I've felt like, well, the Fed is looking to taper, but they want to see another month of economic data before they actually make that announcement. And I do think Jay Powell is being very, very conservative here in making any announcements towards tapering. I felt personally that they could have started tapering at the beginning of the year very easily without a market response. But Jay Powell has a little bit of a history whenever he has tried to adjust interest rates to a little bit more hawkish stance. Remember that December 18 and the market puking up 20% like it was a nothing burger simply because they raised interest rate 0.25%. And so I think he's very conservative with making that announcement, because once you make that announcement, you're kind of stuck. You're kind of stuck towards doing that. And so I do feel like the labor market numbers today, and it was a very, very good report for the U.S. economy. You're talking about a labor market that added 943,000 jobs. The unemployment rate fell to 5.4%. You had jobs gains in every industry, led by leisure and hospitality, with 380,000 jobs. Hourly earnings were up 0.4%. There wasn't really any negative that you could look at. Participation rate increased. Every metric you look at from a labor market numbers were better than the expectation. And I do believe that has to put that. I don't want to ever put the absolute on the Fed, because the Fed is the constant. We will do whatever economic data comes in the future. But these labor market numbers, this is the last labor market numbers before we start getting into the tapering of the Fed during Jackson Hole. I think this might be the last nail in the coffin for that tapering conversation. I think the Fed's going to announce tapering, and this labor market numbers certainly give them the economic ammunition to handle the tapering. And quite frankly, unlike the last time we tapered for the $85 billion in quantitative easing that we were doing after 2013, there was a lot of hesitation towards tapering in the market. There was a lot of concern about how tapering was going to impact the economic recovery. I don't think there's many economists out there right now that have that philosophy. And I know the banks don't have that philosophy. The banks, JP Morgan has said this multiple times. Goldman Sachs has said this multiple times. We don't need your money. Well, it's time for the Fed to take it away. And the labor market numbers are certainly giving them that ammunition to do so.
And it all looks to be heading towards that.
Yeah. And it certainly could be some fireworks, but I do believe the market and the economy is in a much better position to handling this tapering conversation than they were in the past.
And then this economic data point, Frank, has created a little bit of the catalyst that could lead to a potential breakout here. What is your read on the technical response here, Frank? Because I know that's going to be where your focus is most often.
Yeah.
How are you seeing this market?
It's pretty much going to echo Maddie's. I mean, this one's pretty straightforward. And Matt said you might have wanted to see more volume, bigger move. And like, did you really on a Friday? I mean, maybe purely technically, right?
Exactly. Did you want to see 2% up on a Friday going into that? Probably not, because Frankie, we know what that seems like in the stocks, right? Yep. The stocks you're looking to trade are up 5% and you're chasing.
And you're like, I just can't make the risk to reward work, right? Yep. I have to wait for something else. But I think you're just looking at this bar. If we close pretty similar to what we're looking at like right now, which I would expect is probably the most likely outcome, then just look for some follow through going into next week. What's been nice is we've played some great defense as we've churned through all of this earnings. So that's the thing in earnings, good news, bad news, maybe it's not even good news, bad news. It's good response, bad response, right? Maybe. And so we've really held our own. You're seeing the break in the Dow Jones as well. So you're seeing it, outside of just the S&P, knocking on the door in the NASDAQ. I mean, well, they live in a box, right? Which is cool. We like to live in a box most of the time, I think. So I think you have to believe that the breakout is most likely legit. I would love to see some follow through early next week, of course, but I think technically you're just looking at today's candle. Make sure we close relatively close to where we're at right now. Hold that low, hold that breakout point. Let's just take a little time off this weekend, and then let's get rolling. Let's get rolling. I'm tired of earnings season. I want some pure directional good times.
Well, and Frank, you said the last couple of weeks, been hot and heavy with earnings. There's not a lot of aggressive short-term trading in that environment. A lot of big names that people love to trade. Well, during that time frame, not a lot happened in the market.
Right.
After that time frame, the market's starting to cook. You got to like that as a technician, where the volatility is now behind us. Yeah, I don't want to say you have clear selling going into the future, because this is the stock market, right?
Right, exactly.
But you don't have to worry on this breakout. The one thing we don't have to worry about is overreaction to earnings reports next week.
Right, which is nice.
Yeah, it's just one variable we don't have to take into account.
And I do want to actually go with and highlight the Dow here for a second, though, because Matt, you said something earlier about these big banks, and I went through all the Dow components this morning. I got to tell you, the Dow is looking very, very good on their potential breakout. And some of that is on the strength of banking stocks like Goldman Sachs, JP Morgan, those financial giants. It is a really, really big sector in terms of that regard. And obviously, it's got a beautiful breakout here, Matt. Financials are going to catch a big upgrade. Got to.
Well, yeah, absolutely. You're looking at a lot of those cyclical areas of the market. Let's start with financial here because of the price movement. But you were seeing a lot of these areas of the market, industrial kind of hovering in that neutrality short term, finance hovering in that neutrality short term, energy kind of just stuck in no man's land here, and then basic materials kind of doing a little bit of a similar, but has been fighting for some degree of relevancy here in short-term analysis. But let's start with the financial space. All of these areas of the market of tackle trading have been in the 40 to 45, 50 rankings. We take a lot in terms of short-term technical analysis in our rankings. But the financial sector is certainly breaking out and leading the charge in the cyclical areas of the market. Yeah, you're definitely staring at a decent sized upgrade for the financial sector.
Yeah, I would agree with that. One area that
I also think. But very quickly, but I also think there's going to be an interesting debate happening in the basic material space as well. From a sector perspective, you're seeing the technical analysis kind of shore itself up. You're seeing an increase in support here at about 82.70, but you're also seeing gold stocks just get absolutely rocked today on the unemployment labor market numbers, with gold violating the $1,800 support level. Take a look. Keep an eye on those chemical spaces. The chemical spaces are the bigger spaces in the basic materials area of the market, with a lot of the mining stocks getting beat up a little bit. Chemicals are starting to quickly come into favor in the actual basic material space. And even though I haven't done all of my scanning so far today for the scouting reports, I've only went through a couple sectors so far. Basic materials was one of those sectors, and you're looking at an environment where, again, and I know we'll talk about gold here in a second, but you're looking at gold here just getting rocked against that 1,800 support level. You're seeing a lot of stocks that are in the material space, like Newmont Mining, gap down on that as well. But what is starting to cook in that space, and just to keep an eye on, is some of these chemical companies that are starting to solidify their technical analysis. And again, here's just a couple of the ones that I do want to talk about later on today. SQM. It's got earnings coming up soon, but look at that right shoulder breakout there. You got FUL shoring up that right side resistance, fighting up against that 50-day moving average. We've seen what the breaking back above the 50-day moving average represents. Just look at the financial sector today as an example of that. But look at the importance in these spaces against the 50-day moving average over the course of the last few weeks. Look at industrials just hovering around that 50-day moving average. Look at, let's take a look at basic materials, fighting up against that 50-day moving average right there. Look at finance, fighting up against that 50-day. Breaks yesterday, confirms and flies today. And so you're looking at a space that could be heating up. Lynn is one of the better of the dogs, and you got a pretty clean breakout at 310. So, I do think the chemical space in the materials is cooking, while the minor stocks are a little bit of a stay away right now.
Frank, is there anything grabbing your attention in sectors you want to highlight right now?
Yeah, I mean, that definitely stands out. Maddie said it in the pre-production, but it was pretty much spot on. chemicals in, gold out, and
it's what
it
it
is
is.
true. There's a variety still holding up really nicely, and some interesting setups, I think, within there. It's very largely gold, but like Matt said, you're talking about XLB. The way the ETF's weighted, it's very chemical heavy. It's not super mining or super gold heavy. So I mean, that really stood out to me as the chemical plays. We're getting a pullback opportunity finally in healthcare. We need a little bit, we need a doji, right? We need a doji. We got one of those patterns developing, but you have to like it. You got to love the finance. And I mean, finance is playing ball. The regional banks are all playing ball. I mean, it's very much across the board. I love the diamonds as a way to take advantage of that Dow Jones breakout. Personally, I think that makes for an interesting tradable instrument in this particular situation.
Mm-hmm. Yeah, ETFs are in play here.
Yeah,
I really like.
I'm sure we'll have ETFs on the scatter reports this weekend.
Yeah, I've been watching this diamonds breakout for a while now. Right, not going to stop.
Well, and now Frankie, I mean. As the Dow Jones has been kissing out that 35,000 level, obviously the Dow's going to show some chop around 350 here. I mean, you got to call that a breakout. That's a gap and run a little bit on the breakout. So absolutely 100%. It looks like we're going to be seeing breakouts. And again, the close is going to be important here. It's not like we're well above these resistance channels. The close is important, but it's positive on the backs of some very positive economic data.
Mm-hmm, mm-hmm.
Which can I just say for one day, because in the world of the financial markets, a lot of times there's bad news is good news and good news is bad news. Labor market numbers came out today that were positive. The market had it right.
Mm-hmm. Good news is good news.
Good news is good news.
Anything else on stocks before we move into commodities? Let's flash. Nope. Crude oil next here as we talk a little bit about the market response from all of this data. Crude oil has been under pressure this week here. Frank, Matt, and I have been talking about it all week long. What's your read here technically? Is it's in this larger consolidation range, but the volatility is also picking up. So how are you reading this?
For sure. I mean, broadly speaking, nothing has changed. It's still in the box, at least as far as I'm concerned. In the shorter term, especially from a day trading, intraday perspective, this little 3-day floor that we've built over the last couple of days is kind of interesting because we have a little bit of space until we get to the actual support, right? There is a little bit of room to play, I believe, to the downside with the development of that floor. Now, that is more of a day trade. I don't plan on doing that, but I could see the argument on the upside. I don't know where you're going. You're waiting for this to form some sort of symmetrical triangle, maybe. It's sideways, right? And whatever you do within the sideways market, whether that's nothing, whether that's day trade it, whether that's sell credits above resistance, below support, both, whatever, it's a sideways play for me right now, and that's how I'm going to continue to look at it until we get more clarity, until we get a better pattern. I can see how maybe a symmetrical triangle develops in the days and weeks to come, but that's purely potential, right? That hasn't happened yet, and it might rally and break out next week, and it might break down next week. This is a leave alone for me from a directional point of view right now, just like last week and the week before, and really since it kind of topped out.
Matt, anything you want to add to crude oil here?
I did appreciate Frank's attempt to paint that pig.
Hey, I gotta ask him for the paintbrush every now and then.
Sure. I did notice Tim didn't ask my opinion of the technicals.
I know your opinion. So, and by the way, I love that you just drew that box 3 months into the future. So.
I just wanted to give you the amount of time it's going to take. That's it.
Fair enough. We do got to talk.
Listen, here on, when is this? 10:15. My birthday's on 10/13. Ask me crude on 10/13. We'll talk about the breakout.
All right. I like it. Next one here, let's take a look at gold. Obviously, the dollar spiked after the jobs report, and gold has been under pressure as well. But the technical response was very, very key. Heading into that report, you were sitting on this intraday level. We've now shot all the way down, basically into a new support level as well. The old one that we had down here in the 1760 zone. Matt, what is your read here on gold?
I was talking to Pete Thomas on the podcast a little bit ago, and definitely check out Pete's interview on the podcast level, Pete Thomas. But, There was a moment in before we even got on the podcast, and even on the podcast we were discussing it, and two old gold hacks just complaining about how gold responds to everything, like to everything. It's got inflationary analysis, it's got economic sensitive analysis, it's got safe haven analysis, it's got every degree of analysis, and it's actually a fairly complicated beast to understand sometimes. I don't feel today's that complicated, actually. Today you were fighting against, and when you're looking at the gold price chart on the 30-minute chart, you'll see what I mean. You're fighting that 1800 zone right here, the same way we fought it there, the same way you fought it all last week. I mean, it's a very well-known zone. You're fighting that zone right here. Well, an economic report comes out on the labor market numbers today. That report is a rock star report where people's opinion of the economy is improving, where their participation in the economy is improving to the point where the Fed is now most likely going to start tapering their $120 billion in QE. In that environment, there's not a short-term need to protect anything. And so gold gets blasted in that environment for the same reason the S&P is breaking out, for the same reason the Dow Jones is breaking out today, for the same reason financials are flying today, is because gold broke down. What was negative to gold was very positive to the marketplace. Gold, for the most part, I see gold as that safety play, physical gold as an inflationary protection. Digital gold is more of a safety play in the short term against economic calamity. When you don't get that, there's no reason to have gold. And so you had this combination 1-2 punch today, right? Gold was in the corner getting punched, right? We talk about that analogy, the boxer in the corner, the boxer in the corner. When you're fighting against support, you're getting punched, you're getting punched. And then you get the combo of the labor market numbers in the same time frame that you're fighting up against an 1800 support level. That was just too much positivity for old gold to withstand that. And gold took it on the chin. And now you're looking at an environment where, we talked about the 1800 to 1840 zone. We got excited about the potential breakout in 1840 zone. This blows that up. This completely blows that up. It resets the entire trend. It resets all of the analysis over the course of the last month. And that's why you have to be patient with gold. That's why there wasn't a trade at 1800 to 1840. You have to be patient for gold because gold is that macro theme that drives macro analysis. So no, it blows that up. You're looking at a support level at 1750. If that's violated, you're just walking down the stairs to 1700.
Frank, anything you want to add to the technical
No, I mean,
analysis
it's pretty spot on. It was a 1-2, maybe even a 3 punch, because you had that little attempt.
It was Iron Mike Tyson in like 1988. Like, wow.
Yeah, it was. I mean, it was not a pretty
Tyson versus Spinks. It was horrible.
Yeah, it was bad. Now, at this point in time, there's nothing here, right? Let's watch and see how we behave at the support zone. Because like you said, Maddie, if this support zone gives out, then, well, let's just see where we work to next.
The thing about it is, even if it holds, there's nothing.
No, it's weeks away if it holds, right?
Yeah.
At the minimum. So, yeah, it's that pretty much gobbled up that potential break. Hey, the break's still there, especially if you hold support, right? It's just a long ways away. But you brought it up in the earlier today, Maddie. It's easy to talk about all what we talked about, but there was a lot of stuff that was still sitting on top of us, right? And so you add all of those longer term averages and that resistance to boot. It just yeah, I mean, did it happen faster than I would have expected? Of course it did. I'm never going to expect gold to move like that, even though there are days it does. It just had a lot going against it. At least for right now, it lost that battle.
Yeah, and I do think you got to be looking at 1750 at this point, and quite frankly, I think you're looking at 1700. And honestly, from a trend and pattern perspective, I'm at this point, and we're weeks away is kind. Away is kind because I think it's reversal analysis. And when you talk about reversal analysis, you're talking about you have to have time.
Oh yeah,
especially on gold, because if gold V shapes, I'll hate that more than I hate anything.
Yeah, it's gonna take some time. There's no doubt about it.
Yeah.
Bitcoin last, and then we're gonna get into some stock talk. Got a few earnings companies that we want to highlight here today, and then Coach Frank has some great charts here in a few minutes. He's going to share with the team. Frankie, Bitcoin obviously has fired off of that little 90 EMA. We're now rallying, pushing a breakout. We'll get both your technical response here. Matt, you first though. What are you seeing here in Bitcoin?
I'm seeing an asset class that wants to go ding 50,000. That's what I'm seeing. Frank, do you agree?
I would agree with that. I mean, this is a very good, I mean, this last week and a half, I mean, sure, the big pop, right? I mean, that was awesome, especially for the folks who have been holding this. So I'm happy for them there. But as you think about the construction of the chart, the way we've behaved ever since that big pop a couple Mondays ago has been very solid. We work to resistance, profit taking comes in, it's really light, pulls back to that 9. Buyers come in, we get that higher low. We've now made a higher high, broke through resistance. I mean, this is exactly what I want to see from, forget about what it is from a chart point of view.
Mm-hmm.
I'm going to like this chart. This is, really solid reversal characteristics, really solid confirmation, how you're targeting and where you think you're going. I think there's probably going to be a lot of opinions on that. And who knows whose is right.
Yeah,
but
let them argue on Twitter.
Yeah, exactly. And we just want to see it. Listen, they just want to see it go up on Twitter, and I'm hoping it does. I'm with them. I'd like to see it.
They got the haters and the lovers of asset classes on Twitter. They don't bring much to the conversation. But Frank, you said something that did pique my interest, because any chart that looks like this, I don't care what it is. If it's a stock, if it's a commodity, if it's a currency, it doesn't matter.
It doesn't
matter. You're going to like it.
It doesn't matter.
Simply because it's got the symbol BTC doesn't change the analysis. The analysis is consistent. You see an overextended price coming into a breakout. Nobody likes that. We hated that. We hate it because it's overextended. And it doesn't matter if it's Bitcoin. It can be crude oil. It can be gold. It can be Apple. It can be anything. Overextended runs, technical traders don't like those things. They'll miss out on the V shape. They'll miss out on the volatility, and they're perfectly fine with it because we've missed out on a lot of type of stuff like that.
Yep.
We like technical patterns. We like probability analysis. We like positive reward to risk ratios. We like timing getting into certain asset classes. We like volume supporting. We like these things, right?
Mm-hmm.
And so when you see this is overextended, you want to see the consolidation. You want to see the flag. You want to see it come down, reset the distance that it's running into the breakout. And so you're running from 29,000 all the way into 42,000. That's a lot of distance to cover, and to still say it's going to get into that 47 to 50,000 range. That's a lot to ask of an asset class. Whereas when you're coming down from now 37,000, right where I took the 200-day moving average off just because I wanted to show the scale on the S&P 500, but that's right where the 200-day moving average is right there. And so you break up above the 200, come down and retested the cluster moving averages. So you tested the very important long-term metric of the 200, but you're also testing the momentum of the 90 EMA here as well. Everything's consistent. Yeah, it's volatile, it's Bitcoin, but it's consistent from a technical perspective. Now you're reclaiming those resistance levels. Yeah, I do think 47 by 50K makes a lot of sense here.
Yeah, I would agree. As you look back to that, old pivot back there, that seemed like a pretty clear path of not really a lot of anything, whether you're worried about that or not. I don't see anything until that point that could at least maybe worry me.
40, 45, 47, and 50 are your numbers that you would have to concern yourself with technically. But the number I'm focusing on more than anything is this 42,000 breakout. You got to call that confirmation at this point.
Exactly. I would 100% agree with that. Whether you want to trade it or not, that's a different story. But I 100% agree.
And Frankie, what you trade, whether you're trading Bitcoin or whether you're trading a proxy for Bitcoin, right? We all have that. I don't trade Bitcoin. Proxies are kind of, until they get a legitimate Bitcoin ETF, which SEC, you're behind the 8 ball.
Come on, get on
that one. Come on. And we don't believe your nonsensical arguments of why we can't have a Bitcoin ETF when you have proxies, when you have mutual funds, and you have futures. Get on it. So until then, we're all going to be using proxies, but you got to call that the asset class. You got to call the asset class a breakout. And then on the backs of that, you also have the fork that happened yesterday on the London Stock Exchange with Ethereum, and Ethereum was blasting off. So I think you do have a lot of positive mentality shifting into the crypto space right now.
Yeah, the Ether chart and the Bitcoin chart are obviously looking very, very good both together. I got to tell you also Coinbase, you talk about proxies. Coinbase is looking gorgeous. They have earnings next week is the only issue with Coinbase on August 10th.
Well, and
you thought you
and
were
y'all
done
know
with earnings, didn't you, Tim?
Listen, Coinbase will become over time the number one proxy for Bitcoin.
I also
class.
believe that.
I'm not in anything on Coinbase yet. I'm waiting on that earnings. But Coinbase is the proxy that I have chosen as a proxy for Bitcoin. And I think the market's going to choose Coinbase as the proxy for Bitcoin.
Yeah. It'll be one we highlight next week. Obviously, we'll see what they do on the earnings.
That stinking earnings. Oh my
God.
I know. It's like a horror movie, right? It's like it's over, you're safe, and then all of a sudden
here's a great chart. Yeah.
Frank, you had to bring up the one earnings we were concerned about next week, bro.
Yep.
Well, Disney has earnings too.
Disney. We got some names next week, actually. Just not the. Frank's right. You're into the last week of earnings, and you get some big names, but you don't get big market movers.
You also don't have the volume of names.
Yeah, and you don't have a lot of big.
130 names or whatever it is. Yeah.
And you also have the Apple 150 breakout to trade, and there's so many different charts out there right now.
That's right. Speaking of earnings, let's transition right into it. There's a couple companies from the last 24 hours that did report. We wanted to highlight here today. Maddie, what you got for earnings roundup today?
I got 4 stocks, and then I got an interesting utility post earnings candidate technically that I want to get Frank's take on. Ooh. I am going to rapid fire these earnings here today. We got DraftKings coming in at 76 cents on the negative versus 61 cents expectation. So a miss on EPS numbers. Revenue came in slightly above the expectation, 297 million versus the 242 expectation. They did slightly increase revenue guidance, and revenue did increase 319% year over year. So very good earnings increase from a year over year perspective. Frankie, breakout, Cody special retest $50. I'm kind of in the mode of need a doji here.
Yeah, I would say so. That's right at the 200. I think this is one of those.
Let me add the 200 while you talk.
Yeah, so I think at this point in time, you actually want to see a fair retracement, a little bit of a pullback, followed by the break the next time. If you're looking at this chart, I always assume that the 200 wins, right? And that's always an assumption that I make. I want to see that develop. Nothing here today. I think these guys still got to get on the right side of that 200 before I'm interested at all personally.
Yeah, I agree. A doji here does reset that support level right there above the 50 and the 20 and the 9. I do like that. I do agree, though, that 200-day is going to play a role here. A little front-running analysis perhaps next week on DraftKings, but stay with us in the halftime report. I'm sure we'll talk about it if it does set up from a technical perspective. Moving on, let's take a look at Monster Beverages very quickly, firing off support on a gap and run here. Monster comes in at 75 cents versus the 67. Nice little beat on EPS numbers. Revenue came in slightly above the expectation at 1.5 versus 1.4. That resulted in a decent 33.6% yearly increase in revenue. Firing off support here. It's got some chop to kind of navigate. I don't see a trade here, Frankie, with the gap and run here as you're fighting against these resistance. You're just too tight against resistance. Do you have interest, though, if we navigate the weekly chart and eventually break out of that $100 level?
100%. I know exactly. I like Monster. So even though I've had some good times and bad times with them. It's not all been sunshine and rainbows with me and Monster. I really do like them. I know exactly what I want. I want 1 to 2 weeks of not breaking out. Whether they want to pull back, consolidate, flag, whatever, I don't really care.
Don't care what the pattern is. High base flag doesn't matter.
But need to develop. I need to take some time off here. But yeah, I am very, very much interested in the potential breakout here. Just not interested if it AMD's it, and it's Monster. It can do some crazy things. It's not AMD by any means. If it just wants to break and run, it's going to have to do it without me. But if we get the right consolidation or just taking some time off and like I said, navigating that resistance zone, I'm very interested in a breakout. If we get it, I'll be sure to be bringing them up, Friday or 2 Fridays from now, because I will definitely be eyeballing how they develop up here.
Yeah, I'm interested as well, but I'm not interested in the daily chart. The daily chart's kind of messy, choppy from 90 to 100, a lot of different micro intraday resistance and support levels that you have to navigate. I do think as that weekly chart solidifies itself towards the top end of the chart, that 99.24 breakout with the top level of 100 does make a lot of sense if it does establish itself, especially on the backs of a positive response on earnings. Let's keep an eye on Monster over the next couple weeks as that does solidify itself. Coming to the financial sector today, and obviously a lot of the financial stocks are pop and running here today with the breakout in the actual sector itself today with some strength. AIG certainly helping that conversation here today, though. AIG comes out with a very decent 152 against the expectation of 119. So a very healthy beat on EPS numbers out of AIG. Revenue came in light in comparison to the expectation at 10.7 versus the 11.3 billion expectation. So revenue was light. It only increased 13.7%. I got this as a lukewarm response with a pretty decent beat on EPS. Lukewarm earnings numbers, I should reiterate, with a very decent beat on EPS. But with the sector moving, lot of sector conversations in AIG, in my opinion, right now. I think the sector's leading AIG and not AIG leading the sector.
Yeah, I would say if I had to choose, I don't think this is a leader. Maybe it's in the middle of the pack. Maybe it's not completely a follower, but yeah, I would agree. And they're in a tough spot to try to trade right now. I think with where they are in the chart, you've got some room to resistance, but you almost have to bar by bar it. And do you want to? I mean, you always can, right? But is AIG?
But it's AIG. I would rather bar by bar almost anything. It's AIG.
There are things I'd rather bar by bar. Yes, I would agree.
It just kind of proved that the financial sector wanted to fly today.
Yeah, I think so. I mean, if this company reported on a different day, I don't think you have
the same
technical response. Yeah, I agree.
If it reported yesterday, it's a doji. It reports today, the sector's moving. This is getting massive tailwinds from the sector, in my opinion, because it's actually a mixed report, and you got to beat here. You got to beat in this earnings season. And then the last earnings stock I want to talk about in earnings roundup is space here, and man, a historic moment for space. It really is a very, very historical moment for space. One of those moments where, Tim, and when Dad created his first small business, his first dollar he made,
sure,
he put that up on the wall, right? You go made that first dollar. It represents something. Space is going to do that today because they made their first dollar, and that's all they made.
I wonder if they're going to hang the plaque on the wall in
all right,
Richard Francis's office.
Let me give the actual analysis here, but there is truth to what I just said about old space. Space comes in at a whopping 0.6 million in revenue versus the expectation of a whopping 0.4 million in revenue. I guess that's what you get when you go to space.
Yep, you made 600.
You make 600 grand.
Well, Virgin Galactic,
listen, it was zero last quarter. It was zero last quarter. It was
exponential
zero the
increase.
quarter before that. So that is a 600% increase in revenue year over year.
Fair enough.
I don't know why people are buying this.
People get pulled into this one, though. It is very common. I see it all over the place. Some people just have interest in this company. It's very volatile.
I have interest in the company. It's a fascinating human interest story, but they still just made 600,000 in the quarter.
Is there any trade here, Frank?
No, not in my opinion.
Not for me either.
No.
Not for me either. All right.
I see some momentum above 50, but it's pure momentum based and not technical pattern based.
Yeah. All right. Let's look at some
patterns.
That is
all I have.
Let's look at some patterns that are probably setting up for some trades. One of my favorite things we do each and every week is when Coach Frank comes and joins us on Friday. He always brings a handful of his favorite chart setups that he's preparing for the weekend, getting ready to trade next week or the week after, whenever they do set up and confirm. Frank, what you got today for Frank's charts?
Ooh, I got I got a few that are interesting that at least I find really interesting. I want to start with BTU, if you would be so kind. Peabody Energy.
Now, this is interesting to me.
So as you can kind of see here, we're kind of pushing towards the top of this range. I think you have to go back in time a little bit, maybe to a weekly chart to really appreciate kind of what's going on. We've had this huge rounding bottom, right? It's, you can see it on the daily, but I think it's a little easier to see here on the weekly right now. Been trending the right direction, knocking on the door of a breakout. Don't really have any resistance, just with the way it's moved. Any real resistance, I mean, there's a little bit everywhere, right? Because we've been at all these prices, but really until we approach that 200 weekly, there's nothing there that says this has to slow me down by any means, which is quite a ways away. So I like the way we've developed on the daily chart for a little bit of a breakout. I love the fact that we've been trending the right way. We've been seeing that, volatility pick up a little bit, right? The bar's definitely getting bigger as we've been working our way up. Not saying that 20 is necessarily the target, but there's a big window to approximately 20 that gives us, things that I would be interested. I mean, we're going to have to deal with things like, 17, there was a little floor, little, pivot. There's a lot of little things along the way, but nothing that really scares me. I really like the way these guys have been trending as of late. I really like where they are in the short term for an entry perspective. And I like the window of opportunity that they present. So what do you think, Tim? Did I sell you on Peabody Energy?
Not for an investment ever. I'll just say that I'm not going to invest in a coal company, but not a believer in their future. We'll say that. But interesting, we come from coal country, and I did not know that Peabody had even picked up this much in the last year or so. It had been under pressure for years and years and years and years. You see those lines on the long-term chart. Reversal characteristics here on the daily and the weekly chart were post earnings as well. And you got a little cheap stock breakout play. I see it, Frank. I think you could map something out here. I got nothing against that part of it. Matt, what about you? Are you seeing potential here in BTU for a trade?
Keyword trade, but yeah,
I would agree.
Absolutely.
Keyword trade.
Increasing support level, technically horizontal resistance level, pretty clean trigger above 12.4 there. I definitely, I couldn't veto it based on the technicals.
Yeah. And that's really what jumped out to me was just how clean the technicals were.
It's clean. It's clean towards the top of that breakout. I do think the only debate would be on targeting.
Yeah, I think going into that, high 16s, approximately 17 for a trade is probably where I would be looking. I love the window, right? I love that there could be other trades, but I think for a secondary target, just somewhere in the mid high 16s is where I'd be looking.
I think and I wouldn't disagree with that if you're looking at position. I see a little 14, 15 action here. I do think you got to navigate from a shorter term perspective, but I definitely see 16, 17 as a secondary target.
Yeah. So should have the risk to reward. Should have the risk to reward.
Easy.
For
even at 14, you will.
I think 14 would be T1 for me, but
yeah. And there's nothing wrong with that. And that's what I love about having this space and these windows on above us. It doesn't have to be our target. It's just, there's nothing in the way, right? That's what we always would like to see. We don't want to have to deal with any more challenges than we absolutely have to. So it looks like I got this one through. So I will take the deal. Okay. While we're on weekly, let's take a quick look at FTV. I don't want to forget this one. This one's an interesting chart. Old FTV here knocking on the door of a breakout here as well. Post earnings, I don't know what the earnings were, but I can tell the response was positive on it.
66 cents versus last quarter 27. I don't know what the earnings are either, but that is improvement.
So it is a step in the right direction.
And it fired off support.
It fired off support. We've kind of taken that time to consolidate, right? Kind of like the Bitcoin chart where we fired into it so hot and heavy that it was like, I just don't dare buy that breakout. If it happens, now we've had a little bit of consolidation to take a little bit of profit, to take a little bit of a breather. Makes sense that that's where it happens. So just a little breakout play on FTV here. Any thoughts?
I only have one question for you on this one, because you and I have had this conversation that I'm going to ask you about several times, actually, I think internally. The overlapping candles in the consolidation, does it concern you when you're looking at a chart like this that has characteristics where it's really choppy at different points? When I know that you're looking at the breakout saying, hey, Tim, that's old consolidation stuff. When a stock breaks out, maybe it performs differently. Do you have any
can I answer the
problem with
question?
that?
Yeah, go ahead, Manny, and then I'll add my 2 cents.
Tim, that's old consolidation stuff.
Yeah.
Yeah, and that's kind of how I would look at it as well. If, but there is a legitimate, question in there, Tim, where sometimes you're not quite sure where to call the breakout, right? So you couldn't maybe go in and place the order in those scenarios. Like AVGO is a perfect example, in my opinion, right now, of that. It's a breakout candidate. I'll know it when I see it, but I don't know where I think it is yet. And so then I'm just going to demand the close and say, hey, look, let's get that close. Let's look to trade within that when that opportunity presents itself. So if I do have that feel of a chart, I'm not afraid to say, hey, listen, prove it to me. There's, potentially another trade after. And if I miss you, whatever, won't be the first one, won't be the last one.
That's fair.
Yeah, I looked very quickly in their earnings numbers. They were fine. They weren't impressive. It came in pretty close to the expectation. They do provide guidance. Guidance was slightly increased, but I would say within the ranges. I've seen this report many, many times this earnings season.
That's the report, right?
That's the report. So it wasn't nothing to write home about. So I got this pure technically here, and technically I got the breakout channel at 75 with a target of 78 by 80.
Mm-hmm.
Awesome. Yeah, I'm not too far off there.
And Tim, pro tip, whenever you're confused with the chop,
I saw that.
Drop.
I love that. Yeah. It does smooth it out.
It does
makes
smooth it
so
out
much
a lot.
easier to read.
Yeah, it helps a lot when you go to a larger time frame that chop is, and it does. I mean, it's usually one of those things. Everybody's got their own eye of the beholder thing, right? Sometimes I see the chop and Matt's like, dude, you're a wimp, right? But it's always in the eye of the beholder.
Sure. Now the breakout candidate, though, what we got next?
And then we do have quite a few breakouts. I know you guys have talked about it a few times this week, but I do think Cleveland Cliffs is worth mentioning.
It was the first stock I had written down. Well, to be fair, I did start scanning in the material space, and there was no A's I liked. The B's were gone. Cleveland Cliffs was next. So, but it was the first stock I did write down. I love this snapback bullish retracement.
I agree. Nice upward movement here today, showing that maybe we found that bottom. What I love about these guys is I think this is one of those charts where you can play it directionally. That's kind of the lens I'm looking at it. But you could also use this as an opportunity if you wanted to do some naked puts. I think Cody was talking about naked puts in the Trade Masters. I think Mark brought them up in the Queen's Court this week. So I do think there's a lot of ways that we could go at this chart pattern.
Whenever I judge Trade Masters, if you bring a strong bullish retracement candidate on a breakout against the 52-week high, and you try to do a naked put, listen, Tim, I got something for you. I got something for you. See, Frank, I'm now the executioner at Tactical Trading. Okay,
I like it.
And Frankie, I got a sword. Okay, that's what I got. So if you want to bring a naked put on Cleveland Cliffs, I'm just saying, I got a sword.
You get chopped.
There's going to be some chopping, is what you're saying.
Delta analysis.
That's all I'm saying. You get chopped. No,
listen.
You can sell a naked put on anything, literally on anything. Why would you do it on such a beautiful technical pattern like Cleveland Cliffs? I just don't get it.
To each their own, but yeah, I'm with you. I'm just coming at earnings season. You can bet you there's only one lens I'm looking at this one through. So that goes without saying. All right. Any thoughts before we move on? Got a couple more I wanted to take a look. I really want to talk about this one with you guys, and that's Juniper, JNPR.
Okay.
Little Juniper action.
A little bit of Juniper action here.
Man, I haven't analyzed Juniper in a long time.
It's been a while.
It's been a day.
It has been a while. If you've ran into Juniper before, this is nowhere near their highs, right? They're in some ways kind of in the middle of a long range, with kind of 31, 32 as the top of that trading range. But what I really liked is the way we've developed on this daily chart here, right? That there is some chop on the range. I think we go to that weekly to kind of find out where's the real challenge, right? And for me, that's a little ways away. But I think we're looking at building into this from a daily point of view. And two things kind of caught my attention. I mean, when I first looked at this, I just thought breakout, right? You guys know
29.
me. Break that
Got a little
29.
flat going on though.
Let's work. And then as you know, that was really like 2 days ago when I first bumped into these guys. They were kind of having that upward move. But like you said, Maddie, now we've kind of got this little flag where we could at least entertain the notion of trading the flag or using that as a scaling in moment,
the front running
adding
approach
on the breakout itself. I do think there's room. I mean, there's not a tremendous amount of room, but on the other side of things, I mean, the thing about Juniper is they've been in lots of places, right? Matt, you probably remember when they were like $40, $45, whatever it was.
Name
when
the
they
price
were,
tag.
I mean, they've been there. Sure, they've been in a long-term consolidation, and I do think we kind of want to respect that top that's somewhere in the 32 ballpark. And that could be a whole new thing altogether. But I do think there's a little trade in here that we can try to take advantage of between here and there, going into that the 29 break or the flag itself.
And honestly, technically in the short term, you do have an increasing support level riding the 9 EMA, going up against a 29 horizontal breakout. There certainly could be a little scaling in, front running as you trade the flag coming into the add on the break. But it's going to get vetoed.
Fair enough.
And the reality is, I just think there's going to be a lot of stocks to pick from.
There are going to be a lot of things to choose from. Yeah, this is going to be one of those weeks where you do have luxury of choice.
There will be quality technical setups that get vetoed.
100%. Yeah, there 100% will. There's just, you can't, I mean, you can trade a lot of them, and I encourage you to do so, but you can't trade them all.
and Frankie, I do like the 29 handle there. It's clean above 29.10 to 30. I do like the flag off the positive response to earnings after the gap. It gapped down. They said a whole bunch of random crazy stuff that people gobbled up. We see it all the time. Yep. Numbers are bad. They say positive things. We've seen this story play out. You got to like the resetting of the support level, not Bitcoin-esque, but similar type of conversation, I would say. Yeah, so there is a lot to like about the entry. But then I take a look at these longer term charts and I just see a lot of chop between 29 and 30. So I certainly think 30 it dings 30. I certainly believe that, but I believe a lot of things ding higher prices. So it's a matter of picking the ones that you feel really stand out against the pack.
Yeah, I think that's a fair way to look at it. And Addie just in the chat, Cisco or Juniper, you're tied on Cisco's earnings. I mean, that's one thing, but the space is cleaner on Cisco, right? There's just no real great reason. We got an old, the weekly high, and then that high around $58. Just not a lot of time, right? And then I think that's probably the big debate that you're having. If this is the two that you're picking from, is how much weight do you, I mean, we don't have a lot of time, on Cisco's earnings, but I still don't mind Cisco either. Broke out, kind of holding that 9. Would like to see a little more follow through, but you don't always get what you want.
It's got earnings.
It does have earnings. Yep. That's and you have to navigate
again,
those, right?
Too many things don't have earnings. Let's trade the ones that don't.
Thank goodness. What about Rollins? We talked about Rollins last week.
Rolling with Rollins.
They
one of my favorite sayings, by the way.
It's a good one. They broke out this week, right? Probably got some folks into the trade. I won't mention any names, but I know one, or at least one, and pulled back, kind of Cody special style, right, into that, testing that old resistance as new support here. Sold pretty, good yesterday, dojing here today. I wish Cody was here, because this is what I think of when I think Cody special, right? No debate. Pure snapback, right? Pure snapback. But we get to, confirm that breakout, little upward movement, nothing crazy here. The targets wouldn't change. I think you were with me, Maddie, kind of 40 by 42. I think
you're 40 by 42.
Yeah, I mean, that's kind of where I was as well. I need, just nice doji in off of today's high, wherever your stop loss would have been on the breakouts, probably where your stop loss still is, I would argue. But nothing crazy, just another opportunity if we miss that break and want to take
honestly,
advantage
I
of
think
it.
this is a pretty standard swing trade right here. Your entry above the high of today, you're looking at a stop loss underneath the breakout channel 38, and you're targeting most likely, you're targeting the 40 by 42, which would put you well above the 1-to-1 at T1 and 2-to-1 at T2. You're looking more at 3-to-1 at T2 on reward to risk ratio. For me, Rollins, the top's going to take care of itself. What I like about Rollins is the area that it is in, the zone that it is in. And we talk a lot about that at Tackle Trading, and the zone you like it is because you like the support level, right? You really like that support level, and that's what I like about the 38 handle on Rollins. On Rollins is you have this 38, 38, 38, 38, 38, 38. You see the 38 just represent itself so many times over the course of the last year in Rollins, and you see it come down, retest that. The breakout was strong, broke out, established a new pivot high, coming back down, retesting the 9 EMA with a backstop of 38. I like a stop underneath 38, entry above the high. That's a pretty simple swing trade.
Yeah, I'm with you. I'm sold. Tim, what about you?
I really like the longer term characteristics that have been developing here, by the way. This longer term W pattern off of this breakout also leads me towards some of that. Like you say, Matt, the top side can take care of itself. We've got some room up to those tops, and I do like that breakout. I think it's a good trade setup here, Frankie. To be honest, yeah.
I do too.
Yeah.
I like the zone.
I do. Yeah, I really like
Plus,
the
look at this,
the
Frankie.
breakout.
Look at this. Look at that. Look at that 9 EMA.
Hard
Look
to
at that
not like
9
that.
EMA.
Hard not to like that 9 EMA.
Outside of the gap down on earnings, which is obviously volatility and it can violate any technical setup, right? Outside of that, the 9 EMA has been a very consistent support level in the short term to test this momentum. So you got the backstop of 38, that very important support level. You got the momentum of the 9. I do think you'd like it here. The zone is really nice.
Mm-hmm.
Yeah, I liked it last week on the breakout. Gives us an opportunity potentially to come back in, getting that same confirmation a week later. Hard not to like that one. I know we're running up against the clock, so I'll just rapid fire a couple. I still, like everybody here, probably like the Apple 150 break. We're a little ways away.
Doesn't matter.
It doesn't matter when.
Doesn't matter.
Right? Especially if we continue to kind of hold this sideways zone that we've been in. We're a little ways away. I don't feel like this is a great scaling in character, at least right now. I don't think that way, but I do think you want to be keeping that 150 breakout on your radar.
Can I ask you a question, Frankie?
Absolutely.
Does it matter the amount of time it takes on this potential 150 breakout on Apple?
Not
if
really.
It stays within the range.
Not really at all.
Yeah, I agree.
Not really at all. If it stays in that range, I'm cool with it. Whether it's next week, 2 weeks from now, a month from now, just not like a week before earnings.
As long as you stay within the range, Apple's got to be on the 150 breakout.
100%. 100%. You definitely want to keep that in mind. I don't think there's any question at all whether that's something you're trading or not. I do think you want to follow along with that.
And Frankie, you said that there's no front running here, basically, right?
I don't feel like it is.
I agree 100%. There can't be, given the fact that you double topped at 150.
Exactly.
That can't be front run. You got to see the breakout.
I 100% agree. I think you have to see the breakout happen before you can get too crazy. But I do think you are, kind of preparing yourself, both mentally, at least mentally, for that potential breakout, because you don't want to miss that one, right? Even if you don't trade it, you don't want to be the one that someone says, "Man, what about that Apple 150 break?" And you kind of sit there and shaking your head. I don't know. Well, I'm not saying you.
Okay.
I'm saying a hypothetical you. I'm saying Mark.
The first second it dinged 150 to the penny, you knew that was the breakout channel. Like, you knew it. Everybody knew. Well, I don't want to say everybody, but most technicians knew it. You were overextended coming into it. It dinged to the penny. Volatility shifted. At that point, you're like, 150 breakout.
Yeah. I think that was the most common read.
Earnings had the chance, right? It was before earnings. Earnings had the chance to break it out. It didn't, kind of that wide range doji type-esque volatility, but I think there's not a cleaner breakout in the market, in my opinion. There's better breakouts. I'm just talking about the clean nature of that 150 breakout.
It's very, very clean as it is right now. Very, very clean. And yeah, take the time that you need, Apple. Maintain that sidewaysness as long as you need to. And
let those moving averages catch up a little bit.
Sure, nothing wrong with that.
The strength of that movement there. I think Apple deserves to take a little siesta here.
I have no objection to them getting a little break. They have earned it. And I would, hopefully we're talking about that break, a week or two from now, right? Mm-hmm. Hopefully that one's not right around the corner, at least from just that particular breakout. Obviously, if you're in Apple, you're like, shut up, Frank. Let's have it happen Monday.
Well, I was going to tell Tim Cook, I'm like, Tim Cook, it's okay to take a siesta, but when you break out of 150, you better run.
Mm-hmm.
So I'm saying we're willing to be patient with you.
We're willing to be patient. Yeah. So we'll be patient. You just don't give us a fake out, right?
Yeah, no fake outs. How about that? No fake outs, Apple. That's fair. That's an agreement. We'll be patient. No fake outs. That's an agreement. I like it, Frank.
I like that agreement as well. Yeah, because that 150 breakout, I think a lot of people are going to trade it. So I do not want to see a fake out there. No, all right.
Not at all. Not at all. I'm going to throw one more, and then I'll let you get wrapping up, Tim. I know you were about to say it. ADP, Maddie. See, I know how to preempt him now. I'm getting pretty good at this game.
I've like scarred him or something. I was not about to say
it's the looks. It's the looks. You get this look.
Yeah, you do get this look.
You get the look.
In
Poker
your
game we got going on here.
It's like, Tim wants to go to final thoughts.
He does. So Tim, give me your final thoughts on this. What I like about ADP here is we had that big fire up. We basically based, right? Yeah. And so we haven't really ran. It's created a scenario where that 9's catching up with us, would just be a high base, might be, early next week to mid next week where that might develop. I like when we get this type of development because it usually gives you pretty favor risk to reward, Maddie, because of the way that the base develops, right? And so, sure, there's a lot of breakouts there to choose from, and whether it's this one or somebody else. But when we're debating, hey, who are we trading? One of the key things that we're considering is, well, at least us directional traders, is the risk to reward side of it, right? Mm-hmm. It's like, well, if I can get 3-to-1 here and 2-to-1 there, I mean, all things being equal, where we are going. I do like 220 as a target for ADP, which puts me just kind of with the way I do things with this type of pattern, just shy of a 3-to-1 as it currently stands. So I like this little developing high base on ADP personally.
Yeah. For me, I think the analysis here has to start intraday. Personally, the daily trend is beautiful. You've got a trigger there. And what I like about it, for a potential swing trade, true swing trade, a couple of days, maybe a week or longer, is that you've got clear entries and you can find a pretty good stop loss placement that's going to keep tight risk. So knowing how we could map a trade out here, I think it's definitely on the radar for me here, Frank, from ADP. Yeah.
Awesome. Well, I'll bring a few more to our meeting this afternoon.
Does Matt disagree? I'm hearing
what you're thinking, Maddie. That's a
I think it gets vetoed.
I don't think this one will make the scatter reports. I think it would need maybe two more dojis to do so. And again, it's not really its fault, right? It's going to be compared to other things.
It's the quality of setups you have, but it's the fact that and again, their technical analysis can be very subjective at times, and it's how you see this, right? I do not see this as resetting this trend. I see this as simple consolidation within the trend, whereas somebody else might see it as a high base, and a high base would technically reset the pattern. So it's really a matter how you see this. I see this as something that needs that 9 EMA to catch up to it.
I would love 2 more days of consolidation. I just think that 9 do that. That would be
it's
ideal.
Subjective, but I just think there's going to be better. The trigger that Tim talked about above 214 is clean. There's no doubt about that. Stop loss placement is clean. It's not a bad trade, but you're talking about a swing trade on a stock that's $214 with a target of 220 and an ATR 2. I mean, I'll go take a nap next Wednesday.
Dude, I like boring.
Again, I'm with you. But I'm just saying, I think we can find the exact same analysis on a $30, $40 stock.
Yeah,
sure.
Matt, and you've just been hit with a lawsuit. Tim's lawyers are contacting you. You owe him $5. He recently trademarked.
No.
He trademarked it. It's the,
I'm going at him.
he owns it now.
Uh-huh.
No. This is how I am.
No, you
taking
don't
it
own
back.
You can't have every little grunty sound.
I'm taking it back.
What about I see what you did there? I see what you did there.
Listen, be nice to Tim. Be
Hum
nice
is
to
anybody's.
Tim.
That is absolutely out in the lexicon. Matt can use hum whenever he wants. It's not mine. Mark, your joke did not land on me,
It
friend.
landed on me.
All right.
I've had to deal with your hums more than anybody else in life.
That's one of Matt's pet
Yeah,
peeves.
it landed for me 100%. Say
Sure.
it again.
Well, the audience have won. Great.
That's all. Who do you think he was talking to?
Any other ones, Frank? A pretty good group there.
So no, I'll wrap up. We can get moving along, but always fun. Hopefully, you like some ideas. It's okay to not like other ones. That's the beauty of trading, right?
No,
we have
man,
lots of options.
That's the fun of it, quite frankly. And that's what we do in our scouting report meeting. We have these kind of conversations over dozens and dozens and dozens and dozens of stocks to whittle those reports down for you guys each and every week. Marquee programming notes as we end the week here. I know you got your webinar that you close out on Fridays here in about an hour and 20 minutes or so. Kind of let people know how to get there. Anything else you want to highlight?
Yeah, the mind of the trader at the closing bell. Get to talk commodities. Gina was on vacation. I talked a little bit about sectors. I enjoyed that, but I love my commodities. I like the price action, as far as interesting, gold selling off on algos, oil's pattern. There's some interesting situations out there, things to discuss. And hopefully we sneak in some tackle trading rankings so I can share those with you as well. And then we chit chat to close out every week in the Mind of the Trader closing bell, 3 p.m. Eastern today. You can find that on tackletrading.com on the events calendar.
Fantastic, guys. Thanks for being a part of our show here each and every day here at Tackle Trading. We do go live each and every day. The markets are open at 12:30 Eastern. If you've not done it yet, click subscribe to the channel, click the bell, come back and join us whenever we do have this show. We'll be back on Monday for another great edition of shows. Matt, final thoughts for the team out there for the week?
Preseason action started tomorrow, Frankie. Yesterday. Hall of Fame game. Got your Denver Bronco hat on.
It's exciting. It's an exciting time. My favorite time of year.
Okay. You and I, we got very similar teams this year. Good defense, question marks at quarterback, right? Young, hungry receivers, good, decent, hungry running backs. I feel like you and I have a little bit of a wins bet happening at some point.
Broncos Dolphin wins bet. That's interesting. I like this.
I think it's a fair bet.
I think it's probably
a fair bet. I want to bet against the Bears though. I'll win that.
Well,
one.
that's not fair. Like I tried to pick somebody that I thought was going to be an up and comer, like the Denver Broncos. The Bears are what, 5-11 again?
Listen, if anyone wants to take that Broncos side of that Miami Broncos bet, I will take your actions and bet on the Dolphins at more wins.
Did you?
Well, they're definitely a bet with Mark then.
Mark just came out and stumped for the Dolphins.
I don't know how I feel about this.
I just heard it.
Listen, I've been gambling a long time. I know a good bet when I see one. I like Dolphins over Broncos.
Dude, I don't know. The Broncos got a really, really good roster. Their defense is really shaped up.
Tim feels like he's on the Broncos side of it.
I'll take the Broncos side of that just because. Right. I think it's an even money bet. Mark's got to give me odds now.
A kid's jersey. No, I'm not giving you a
kid's jersey. Kid's jersey.
Dolphins or Broncos for one of our kids. Loser has 4 wins. Tim,
I like it.
That will make my kids want to become a Bronco or a Dolphin fan.
Goodness. Not for you.
Maybe. We'll figure
Somebody help the man out
of the bet. But I'm taking the Broncos side of that for sure. All right, guys. Yeah, and preseason will start next week for a full slate of games. I'm excited about it. I've been watching training camp and all kinds of stuff.
I was just looking at old Frank's hat. The little Denver hat there, old school Denver hat there. I like it.
Yeah. I'm excited. We'll see how long it lasts, but I'm excited right now.
Sounds
all right.
Good. We're out for the week, guys.
Halftime report. Tackle Trading scouting reports over the weekend. Check them out. We're going to have some amazing scouting reports. Start your weekend with the reports and the newsletter. And we, Tim, myself, Mark, will see you on Monday during the halftime report.